What is up, everybody? It is Monday, November 18th. We are back. I didn't post any videos last week towards the end of the week because I'm gearing up for the first day of the boot camp starting tomorrow night. So I was prepping a lot of things in advance, and it was also my birthday on Friday. So I decided to take that day off as well. But we're back on the trade recaps, getting ready to, like I said, start the boot camp this week with the students that have signed up. So if you are interested in signing up on that, the link is in the description below. Go to my link tree, you'll be able to find it. The signups will close by this Friday because you're going to miss 2 classes by that point. So it'll be a lot to catch up. So just wait for the next boot camp that will come up. So today I took 2 trades. I ended up getting a little bit above break even, so some green, and that was mainly due to me. I would have ended up very nicely if I had held to the full target. But the first trade that I took was a long here on the NASDAQ. So getting into the analysis, right? On the 4-hour chart, we always look at that just to see what price action is doing. So we know that we've had this massive sell-off, okay? We sold off all the way down into this 4-hour fair value gap right here where we found some sort of support. Then we open up the night here on this candle and we start to move right on up and started to retrace then for the London session lower. So overall, my thinking was that if we were going to end up being bullish, we should hold this 4-hour fair value gap. Since we are delivering out of this one right here, we should hold this 4-hour bullish fair value gap that's right in here. I noted that if we had a 4-hour close below that, we would be bearish. Same thing on the 1-hour time frame. We had a 1-hour fair value gap right here. Close below that on the 1-hour, we would be bearish. Then on the 15-minute time frame, what I was looking to see was that we would get a 15-minute candle closure above this bearish fair value gap here to then further that bullish bias. And ideally, we would hold this 15-minute fair value gap right there. All right, so that was the thinking that I had this morning. I figured we were gonna trade down into this fair value gap and then move on higher. Now, I did not stick to my rules this morning. I was a little antsy, I'm not gonna lie. So the thing that I noted was the fact that the market opens up. We do sell right down into that 15-minute fair value gap, and we start to get this recovery right here. So this looked very good to me, right? It was like, okay, this was the manipulation lower that we wanted. It now closed above this 1-minute fair value gap, creating an inversion. So I market ordered in on the closure of this candle. So my fill was around this area here, as you can see. And then I put my stop below that swing low, which unfortunately got stopped out. Now, why was this a mistake? Well, let's turn on the quarterly cycles. I always say I don't take a trade in Q2, and this is why, okay? I don't take a trade in Q2 because it still can manipulate some more. If I had waited for Q3 to get an inversion fair value gap, which ideally would have been this one right here, and if I had also waited for after 10 o'clock, these are the reasons why I have my rules, but I didn't stick to them because I just felt like price action has been doing exactly like how it used to be, where it would do the first inversion like that, and if it would tie into the bias that I would have, then I could take that. So I decided to try it today, and obviously that failed. So going back to sticking to my rules that I had set up, that kept me profitable through the tumultuous times of the summer and September and October. So here is the trade that I should have taken. We had this 1-minute bearish fair value gap, traded back into that 15-minute. I was looking to see if this 1 minute was going to create an inversion. If it was going to invert that, I was potentially taking that short, targeting down this draw on liquidity, because at that point I figured it wasn't going to hold for 10 o'clock, right? We were below where we wanted on that 4-hour right there. So then I should have waited for 10 o'clock to see, okay, is it going to hold, etc., etc. 10 o'clock rolls around, we close right up here, holding that 15-minute fair value gap, holding that 1-hour fair value gap, which is this line right here, and also that 4-hour fair value gap. So what does price do? We get that closure right above. The 10 o'clock candle opens up. I could have entered in right here because we inverted this. Price trades into it, put my stop below that swing low, and it could have targeted the original target that I had, which was this swing high here from overnight session right towards near the midnight open. And as you can see, that easily hit. It was a nice 1 to almost 5 risk to reward, and I did not take that trade. I had stepped away for a little bit. I was doing something, I was in the middle of something, and I wasn't able to see that. and I came after the fact. So I came around here. So I was like, okay, let me just wait for another retracement. Let me find another inversion. And as you can see, nothing happened all the way up into my target. So today I did something that I don't usually do. All right, I went to go look at ES. I don't trade ES as often as I used to, but overall, the setup appeared on here, right? We weren't moving as much. I saw that we had the same kind of bias on ES, and I was looking to see, okay, maybe on ES there will be some kind of inversion. So price moves into this retracement here. We create a very small 1 minute fair value gap that is bearish, does not get inverted yet. Once price moves above and this candle closes, I enter in on the next candle. I literally got in right at the open. I put my stop below that swing low right there, and I targeted the same exact draw on liquidity, okay? Right up here. It was a 1 to 1.78. I sold some of it down here. Why? Because NQ had hit that draw, and I did not want to get stuck in some kind of SMT, all right? I've never traded ES before like that in a while. So I decided to take the majority of my position off and then leave my last one to hit the full take profit, which was right there. So I stunted some of the growth just because I don't trade ES. So I did that on purpose, and I'm totally okay with that. I ended slightly green, but overall, I would have made back my loss. I risked the same amount right here. Obviously, I took 12 contracts on MES, whereas on NASDAQ, it's usually about 4 to 5. So this was all new to me. ES was very new to me. I haven't traded it since probably about a year and a half. So I decided to do that. Unfortunately, yeah, if I had held it, I would have ended up very nice. I believe where I sold it was probably like a 1-to-1. Yeah, slightly above a 1-to-1. Okay, not bad, but could have been better. And then I just kept looking to see what else price did. I saw some other setups here on ES, but really that was the main objective that I wanted this morning, was that draw on liquidity. Because the bias was bullish, if you go to the 15-minute time frame, you just look for smooth equal highs, and you can see that was right here, right? We have that candle wick right there and right there. Just very smooth equal highs. There's a very obvious target. Trading up into really the 50% of the range from Friday, mainly on NASDAQ. That was the biggest thing that I was watching. So more often than not, if you take Friday's range, so from the high of the range to the low, typically, and this is a shout out to Lumi Traders on Twitter, she has noted that for the last 13 weeks on Sunday night or Monday morning, price will retrace up into the 50% mark of Friday's range. And so that's why I had that mark there, and that was a perfect target, right up into that 50% mark. It was perfect, but like I said, I unfortunately did not take that. So hopefully you guys ended up green, took those longs as well, and I will see you guys all tomorrow. Peace.